The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look at the German DAX. As you can see, we have been continuing the downtrend, much like we've had here in the U.S. and all across the rest of the globe. But these are downtrends right now. But you can see since that August 12th high, and this is just a 15-minute chart, being yesterday, it's had a pretty good move from 73 all the way down to below 72. And it looks like, excuse me, this is the German DAX coming up next. The German DAX was the first one, folks. The second one is the hold on here. The second one is the FTSE. Let's get the FTSE up because that's the one I wanted to show you. It's actually had a little bit higher bottom, but they are still going down. So we'll see what's going on. Of course, the news is related to what's going on in Hong Kong. Evidently, they've closed the airport for one more day. We'll see how that all ends up. Probably not going to end up very well. I hope it's not going to be like June 4th, 1979, when they had Tiananmen Square. But I don't believe that it will. But, who knows? We'll take watch the news and see what's going on. But it's mostly young people. I don't know too much about it, but certainly in the news. And it is affecting the markets because the market was actually pretty strong last night around 11 o'clock. Tucson time, 2 in the morning, New York time, and then all of a sudden they announced that the airport was going to close again, and the market just literally dropped 150 Dow points and 45 NASDAQ points and 30 S&P points just because of the fact that they were closing the airport in Hong Kong. So a lot of this is news related, and as they say, may you live in interesting times, which is a Chinese curse. Folks, something really dramatic happened yesterday. I'm going to bring it to your attention here. We're going to try to have Rich Anderson on to talk to us this morning because of the fact that if I can just find it. Oh dear, please, Larry, don't do this to me. I just did this chart. Oh, shucks. Are you? Oh, shucks. Anyway, there was a grain report. Doggone it. Here it is. Here we go. All right, here's the corn. I have it here. Just a second here, folks. Let me get this up here, and we'll take a little bit of a quick look at it here. This is where we were coming in to Monday. We made a 382 retracement, folks, and I said in the newsletter, these were acting not very bullish. It took 6 days for the corn to make a 382 retracement, rallied just a little better than 20 cents, and you can see yesterday it went limit down, folks. Believe it or not, we had a 25-cent limit, I believe, in corn yesterday. It goes to 45 cents today, and as you can see, last night the market gapped down again, dropping another 12%. All this is related to the USDA came out and said that they planted plenty of corn. Well, they must have done it underwater, but that's how they did it. So they did say that they planted a whole lot more corn. Folks, if we learn nothing, let's remember what technical analysis is all about. We've seen this over and over again. We've seen it in hogs. We've seen it in corn. We've seen it in just about everything. But the key to remember is if the prices are going up, there's more buyers. If prices are going down, there's more sellers. That's what you have to, try to keep in mind. And whether sometimes it doesn't work. But the most glaring of all the ones that we looked at was way back in January of last year. If you'll remember, Deutsche Bank came out when the stock was trading at $20 a share and offered anybody that wanted to buy it a 35% discount. Boy, what a great deal that is. I mean, boy, you talk about something too good to be true. Well, the stock today is trading at $661. So that 35% discount didn't help very much. So maybe technical analysis, it's not the holy grail. Nothing's the holy grail, but at least it leads you in the direction, because if if you have really bullish news and it doesn't go up, that's telling you something very, very dramatically. If you have really bearish news and it doesn't go down, that's telling you something too. So that's my 2 cents worth of technical analysis. So pay for it what you will, but we'll see. No matter what happens, folks, we are going to get through all of this stuff, all of the politics, all of the economic stuff. We've been doing this for hundreds of years here in the United States, and nothing's going to change. The only different thing that we have here is the fact that we're looking at potential negative interest rates. I just wanted to show you a chart. This is from Merrill Lynch. Just get us up here to give you an idea where we are. This goes all the way back to 1900. That's a long way. And if you'll take a look at this, this shows you, what's happening to yields in the UK, Australia, Japan, Switzerland, France, and U.S. government bonds. This is the yields. As you can see here, the yields have gone from the high there was in around 12.5% back in August of 1982. And then, here's where we are, at this level right here now, where we're approaching negative interest rates in a lot of these different countries, but we'll have to be able to see what that means, because we have never had that before. So it's going to be another one of those things, living in interesting times. So we'll just work and see out. Now we do have a full moon coming in here on Thursday, which will be interesting. And it's always interesting, of course. But here we are over this big low potentially in corn. Folks, if we get that corn down to that level that we showed the ABCD, I would think that, that's going to be so far, below the cost of production. We're going to be making new lows on the year. Let's just get this up here because we could be there very easily tomorrow. Let's put this corn chart up again. That's going to be around at 350, around 356. It was trading at 380, so it's down another 14 cents. We could do that today easily. But that's interesting, and I'll explain to you in my assessment of this. If you notice that D point, that's exactly at the 1.618 expansion number of that swing. And believe me, folks, you can buy it at 1.618 at 56, and you can put a stop at 52. So you can be a farmer in corn for 4 cents, which is $200. You don't have to own any tractors. You don't have to own any land, but that's what you're looking at. But just think where we were in May, folks, when they couldn't get the corn planted and everything was underwater, and the market rallied from May 13th into June 13th. It rallied a solid month, $5,000, folks. It rallied $1 a bushel, and look where it's at now. I mean, you talk about technicals versus fundamentals. I don't know, but I don't think you have to be a rocket science to say, wow, we ought to pay attention to that. That's just what we're looking at here. Now, we're going to take a little break here, and we're going to come back. If you have any questions, I'll be happy to answer them for you, and this would be helpful. 877-927-6648, and we'll see how we can come up with some of these things that we're looking at. So let's keep in mind that you have anything. People ask if we had a tornado. No, we just had a big monsoon on Sunday, just heavy rain, nothing else.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we got Dollar Bill from Jupiter, Florida on the line. Bill, how are you doing this morning?
Good morning, Larry. How are you?
I'm very good, my friend. What can I do for you?
Okay, well, as looking at gold, one of our favorite instruments, it's about a little over $18 off the high of the day. As I look at the daily chart, it looks extremely bullish, although maybe a bit overdone, but I'm not sure. I'd like to get your take on where you think gold might be headed. Certainly, I think higher, but is it about to pull back, maybe?
A bit overdone is the understatement of the year, my friend.
Yeah.
I think we've got a $150 run here in just the past few weeks. It's, I think, 11 or 12 weeks straight up. Now, over the past July and August, I've been working with John Jameson over in the UK, and John is he's a savant. He actually is one of those people that can do things that you read about in the magazines. He reads a book a day, memorizes pages. I mean, it's truly amazing. And his specialty, of course, is history and art, but he does a lot of stuff with trading and stuff. And his specialty is Bayesian theorem, which is related to path dependency data. And last night, using the type of stuff that he was looking at, we got a sell signal in the gold at 1539. The high was, I believe, 1546. But it did trigger at 1539. Until gold gets above 1539, we have to view it as at least short-term bearish. We've already broken, $20, from the high, that's unusual just in one day. But with these big swings we're having, and we're right over a full moon, Bill. That's and if you look at historically, I posted one last night for the folks at 24/7, showing you the last time we had these full moons, they were either right at major bottoms or major tops. And since we have one coming in tomorrow within that 1 day, time frame, I think we could be pretty close. But that's these are pretty wild times, but that's what I'm seeing right now on a short-term basis. I think if we get a $120 break in gold, it's probably going to be a really good buy. So we'll see what really happens with it.
120 to the downside, Larry, would be potentially a buy. buy
Yes,
signal.
the reason why I say that, the harmonic number in gold is 34. 2 times 34 is 68. 2 times 68 is 132. That would take us down about $130. That would get us down to be around 1420. That would be where it really broke out of. So that would be one that would be pretty interesting.
And it's sort of a major swing point, is it not?
Yes, it's a major swing point because that's, we broke out of that. That was a real key area that we broke out of. That was why it's so very important from a technical basis.
So, boy, Larry, for the next few days, or who knows how long, what the time period is, maybe it's a little bit of a stand back on gold, or if not, maybe even take a short position.
Yeah, you have to watch it relatively closely, and it's pretty wild. So if you trade it without a stop, you might as well throw your money out in the street. So make sure if you're going to do something like that, it should not, if it's correct. We should be looking for a pretty substantial correction, and we shouldn't get above 1539. I think we're trading at 1529 or something like that right now, $10 lower. So whether that means much or not, I don't know.
Okay. Nope. Very good. Okay. Terrific. And your work with John Jameson, you and John communicate daily, Larry?
Yeah. Well, he's been here with me for quite a while, and I sent him to California yesterday to spend the time with the Getty Museum and the Manley Hall Museum and stuff like that, to give him a break and also to give me a break, because I've never been around anybody like this before, Bill. Someone that reads a book a day. And, he knows, we had him out with some friends here in Tucson, and they just were amazed at the level of his knowledge. They came over and spent 3 or 4 hours just chatting with him, after we had dinner. And he's very unusual. I mean, he's really a savant. I mean, he's autistic, but he's on the savant side. And it's really... It's really quite. I've never been around. I've been around some smart people, but never like this. It just tells you that, boy, there's some people out there that are certainly. And I've known John for 15 years, and I knew he was smart, but I didn't know he was autistic, and that's what really blew me away. So, and there's good points and bad points about that. Bill, is he can't shut down easily. He has to use yoga and some other things in order to calm his mind down. But boy, you talk about the mind in the computer. It's really amazing. That's why I love you so much, Bill. You're exactly like him.
Larry, so he's actually, or was for the past few days a week, he's been in Tucson working with you. Is he staying for a while?
He's been here quite some time. He's been staying right here at my house. I mean, I've known John for 15 years. I taught him to trade 15 years ago, which he still does, and he's had some interest in a few things about the market that he wanted to work with me on, and so I invited him to come over, and I actually talk with him every day. I mean, wherever he is, he has a home in Perth, and then he also lives on the Isle of Man. And so when I chat with him, sometimes it's an hour, sometimes it's 10 minutes, but, it's always interesting to see what's going on. But he's very good with computers and data and statistics and stuff, and I've always had a great interest in that. And that's, one of the things that makes it fun to think about. But one thing you might want to keep in mind here, wonderful. we had a high of 1546 last night in the gold. So if we get below 1526, that's going to trigger more to the downside, and you'd figure at least $14 from that level would be down $34 from the high. And if you get down more than $34, which would take you down to 1512, if you get below 1512, then you're going to be looking at something a whole lot different to the downside. Whether that happens or not, of course, I don't know, but nobody else does either. That's the good part.
For sure. It's a game of probabilities, and we have to learn to play it as well as we can. So, no, terrific information, Larry. Great talking with you. I'm going to be in touch. Okay, thanks, Bill. Come out here and see me if you get a chance. Love to see you. I'm going to do that, yes. Okay. All right. Terrific. Thanks, Larry. Thank you.
Okay, we do have a full moon is going to be on August the 15th at 8:30 in the morning. We've just been informed by Mr. Z, and we got a break coming already. Shut the front door and raise a rent. Hopefully, we'll have Rich Anderson on the line here, and he'll tell us about what's going on with the corn and stuff this morning, and whether this report is it was a really big surprise in the corn report, as you can imagine, with the market being down the limit in corn, and they had so many people the wrong way, my goodness. And I'll post this wheat chart if you want to see something that was was really quite bearish, as a matter of fact. In wheat, we focused on this in the oh, hold on just a minute here, we got to do something. Oh, there we go, that's what I want to see. Shut the front door and raise the rent. Give me a second here, folks, to get this wheat chart up. Here we go.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I wanted to bring a couple of charts to our attention here that we've had the questions about. One is the Australian dollar. As you can see, versus the U.S. dollar, we've made a major ABCD pattern down there at that 166, at 0.6690 area. We've had a pretty good rally. We're still holding that rally, which is a good sign for a potential double bottom down in here. The key to remember here is I've put it in a red box so that you could keep an eye on it. That's that 1.618 expansion of the move from June through July. Folks, that's that same type of number that we're looking at in the Christmas corn if we get it down to that 356 level. We're trading at around 380 right now, I believe, this morning. So another 14 cents lower in the corn, and you could easily get there. The fact that we were limit down, they've expanded the limits to 45 cents. I haven't seen that in, oh dear, since Hector was a pup, and that dog's been passed away for many years. So this is really an important number here in that Australian dollar. Anything below that would be very, very bearish. And it did make a perfect ABCD from April, 61% rally, and then down to where we're at right now. We're trading around 67.70 this morning, which holds up pretty well. But the other one that's also related to the stock market a bit, I heard Tom O'Brien talking about it, and that is the Japanese yen. If we take a look here, we're going to see the same type of situation here in the Japanese yen. You'll notice that we're looking at a price of around 104.05 as the ABCD, but if you will look at the 1.618 number down there at that 105, we've been as 105.05 here in the thing. We're trading a little above that right now, so that could be a completion of that ABC expansion from June through August, much like we were seeing in the Australian dollar, making a 1.618 expansion. They're both doing exactly the same thing, and that's why we're seeing that U.S. dollar index doing what it's doing, making that three drive to a top pattern that is certainly held. The yen could be related to gold as well. I don't know how, but you know, because each of those, I think the person that really knows this stuff better than anybody I've ever met is Steve Rhodes. He prices gold in yen, pound, euros, drachmas, Swahilis, whatever they has. He knows how to do that, and it tells you, you know, to buy gold with the British pound now. You know, the British pound is low, so that's pretty good. You know, we could easily, folks. You know, we hit 1546 in gold. I mean, that's up 50% from where we were last January when we had the first three drive to a bottom pattern there at 1063 when nobody wanted it. And now the whole world wants it. I think we've been up 9 or 10 weeks in a row without a major correction. No correction has been more than $20 to $30. And we had a $20 correction already today. And that'll be the first time, you know, if we get below that, that would tell us it would be the first time that we had a situation where we corrected, you know, more than that much in a very, very short period of time. So we don't know that yet. The fact that we're over this lunar cycle, which has been, you know, like anything else, a probability. We've had major bottoms on these lunar cycles. All you have to do is look at the chart in the newsletter, and I marked it to the, you know, within one day of all the full moons, they've been major bottoms. That was the head and shoulders pattern that we were watching. The frustrating part about me is I put the orders in and I don't get filled, and the market runs away from me. I've got to learn, and that's part of the reason to having John here is to learn to buy strength and to sell weakness, and that's what I've been trying to do. We saw something from some of the notes that I had from Mark Douglas many, many years ago, that the pain of missing out is 250% more powerful than the joy of winning. When I read that, I just was shocked that he had told me this, and I didn't realize it. But think of that, folks. The pain of missing out is 250% more powerful than the joy of the joy of winning. And I remember talking to Mark about that several times, and the reason why, when he would interview most of these interviews are right here because he wrote that book, Trading in His Own, in my office while he was here in Tucson for those 2.5 years, and all the people that we interviewed, you know, he had these notes and everything, and they would comment that the things that bothered them, losing, that never bothered them, you know, and winning, that never bothered them, but missing out, that bothered them. And that's why he came up with that figure, that it was just very, very powerful. And believe me, I am certainly aware of that, missing part of that gold move. I know I bought it right, made a nice piece of change, and left a big piece of change on the floor. But we'll see, you know, how this thing ends up. We'll do one thing at a time, of course. Okay, let's move on here. We have another question here, and that is about the Canadian dollar. We'll bring this up. Here again, you'll see another pattern that just completed absolutely perfectly. It went up, hit the exact 61% retracement at the 133 level with a shooting star pattern, and then it's started to back off again already, much like the pattern said it would. Now we're still holding in that area of strong support around that 132, 130, 150 level, but you know, this market has been in a really strong trading range for a year and a half between 135 and 130, which is relatively tight for the for the Canadian dollar. So that'll be something that will be really interesting. So we'll see that. Yes, the cattle have been down quite a bit. I believe they were limit down yesterday. I'm not sure. I think Rich called me to leave me a message that the limit on cattle had been expanded today to 5 or 6 cents. And that was related to what was happening to the corn market, I think. But here again, I don't trade cattle very often, but I believe that that's what was happening. I know the hogs were trading, and they didn't have a limit down move at all. But and I'm not sure about the cattle, folks. I really been doing too many other things, so it hasn't really, you know, made too much. So if you'll give me a second here, I need to check the beepers to see where we are. There's what we want to see, what's going on. There's what we want to see. Good. There. We were expecting a little rally here in the stocks, folks. Let me show you why. We had a real interesting group of numbers coming together in the S&P here. I'll just get this up here so you can take a look at it, and sent this out last night around that 2865 level. We had the 2869 level. We had a 61% retracement of the low from the August 7th, and we had a 38% retracement for the low on August the 6th. So that's what we're looking at. How much of a rally we're going to get here, you know, we'll have to wait and see, but we have lots of bearish news. And if the market rallies into this bullish news, you're going to have to bear with me 1 second here, folks, because my limit minders are going wacko, and I got to figure out what those are doing here. Ah, that's good. That's the oh, this is wonderful. Color me happy. Oh boy. Okay, hold on a second here. There we go. And we just broke. We just down $34. Yeah, we're down 30. See, 23.54. We're down $24 now in the gold. We get much below 15.20, folks. We have a major top has been put in on the gold market. That's what I think is happening. But we'll have to do one thing at a time here, and that's what we're going to try to do as we go through and look at this. 877-927-6648.
If you're in the CD market and looking for secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the Gold Report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your Gold Report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, folks, we're back, and we want to take a look at this euro because it's had a pretty good move. You'll notice at the bottom we made last week down there at that 1.27 expansion was also an A, B, C, D, 3 drive to a bottom pattern. That was done on 250% of average volume, and that's average volume coming from the Forex banks, folks. That's not the Merc. That's the real foreign exchange market. So that's why we're trading well above that 112 level. If we can get the euro above this 113.50, then it's got game, and that would tell us that 3 drive to a top pattern that we had in the dollar index has definitely put a lid on the U.S. dollar. And I'll bring this up to let you see it because it's continued to come down from that third high there, and this would really get a validation. That would mean the U.S. dollar index would have to trade below 96. We're quite a bit above that right now, but if we do get below 96 in that U.S. dollar index, it would certainly tell us that is something that would be really important to look at. Hey, we got Shane Smolian calling in right now. Shane, are you there? I hope he is. He said he was going to call in and talk to us about the Federal Reserve, and hopefully when he comes in, we'll be able to.
Can you hear me, Larry?
Hey, there you go. How you doing, my friend?
I'm doing okay. Good morning.
Good. Good morning. You told me this about 30 minutes ago before the market took off that looks like we have some Fed juice coming in this morning.
Yeah, oh yeah, they've been working at it. It's just been really tough with the global situations going on, and but the Fed has been very persistent in here. I mean, I gotta give it to them. I don't know if you can see my screen here or not, but
yes, I did. I posted it so the folks could take a look at it.
Can you see me now there with the little pen? Like
I can't, but the other folks can.
Okay. Well, essentially, the Fed, as they always do, in recent days when we have these fires, they've been coming in pretty strong with the juice here, and that's why we saw such a strong rebound in the markets last week. In essence, erasing all that technical damage in virtually a day. So we do have a lot of conflict going on throughout the world right now. So they're trying to. They have a lot to overcome. But the thing you have to understand about the Fed is that they're very persistent with what they do. So if they don't get it today, they'll get it tomorrow. If they don't get it tomorrow, they'll get it the next day. But you can see down here on the chart that we've had this ramp up going on essentially during this whole decline. So what the Fed does is they ramp up the juice as you get these larger declines. And they've been doing this essentially for the last year and a half. So that's a change in behavior. Before, they were essentially just in there for longer term pictures. When I say longer term, I say monthly timeframes. But now they tend to respond almost within a couple of days, and they're in this process right now of ramping the juice up, and I don't see any letback in that. So I've had to actually create a new indicator here called Fed Juice Momentum, and that's not dealing with price at all. That's just dealing with the action of the Federal Reserve as they come in and to stimulate the market. So it's really a tough game if you're trying to short this market. And I always tell people, get your shorts in while you can, because this is not a natural situation. The natural forces, of course, are down on this market. They're trying to go down. But when you have this artificial force coming in on a persistent daily basis, eventually the Fed overpowers that.
Well, boy, that's sure moving today, that's for sure. Shane, I have a question, and that is the Federal Reserve, when they do this, they have their own trading rooms and stuff, don't they? With do you know anything about that? That you know how they operate? Is where the
Well, that's a good question. I measure an aggregate of data that comes across the screen. I actually signed up for an email service a long, long time ago that you can't subscribe to anymore, and they send all of this information out every day. They send out, on various metrics throughout different markets and auctions and bonds and mortgage-backed securities. And so I take all of this aggregate and I look at it and I see, how is the market reacting to it? How aggressive are they getting on this market? And so I can based on what I'm seeing, the data that I'm seeing, I present it, but I can speculate on what I think they're doing, but I can't really say, oh, I know that they're in this trading room and they're buying on this date. But what I can tell you is when I look at the data, that the data coming across my screen, however they're doing this, is showing that they're extremely strong right now. And if you look at this raw weekly chart, the Fed is still they're essentially at all-time levels now, beyond any quantitative easing period. And in the short term, they actually, like I said, they'll actually ramp this thing up, and they will continue until it turns. And so that's why, when we saw that turn down on that early August period on the weekly time frame, it looks so dire. And that's why I was saying when I came on last time, I was like, I know it looks like it's going down, it feels like it's going down, it smells like it's going down, everything looks like it's ready to go down, but look at what they're doing. Look at the data that's coming across the screen, and it's showing that they're trying to counteract this.
Wow. Well, I know the only time I've ever been in a Fed building was in Chicago when I was back there during 83 to 82 to 84. Byron, my friend Byron Tucker, was dating a girl that worked for the Fed, and so we got invited to the luncheon there, and it was quite nice. But we went into the trading room, and there were about 100 traders in there, with their Quotron machines and stuff, doing whatever they were supposed to be doing. We didn't get to stay there very long, but at least we got to see it, which was and I know there's 12 federal banks, so there's got to be a whole lot of people out there that are doing types of trading for them, I guess. So, and I'm sure they have rules that hey, what do I know? I don't really know. Hey, listen, I want to thank you for being on and alerting us to this, because folks, he told me about this about a half hour ago before it ever took off. So congratulations, another good piece of information. Hey, how do people reach you if they want to get hooked onto your Twitter service? Shane, can you tell them what to do?
Sure. There's you can email me, Shane at wolftraderfutures.com, or I have a free Twitter service, which is wolftraderinfo at wolftraderinfo, and then there's the paid service, which is wolftrader1.
Wow.
So the green logo is the free one. You can look at there at wolftraderinfo on Twitter, and I'll update that periodically. It's not the same as the paid service, but I give a basic.
Yeah, Shane, do you have any idea what's happened? I mean, I just saw gold drop $25, bonds drop a point. Is there some kind of news out there? I mean,
well, what's interesting is I have this daily signal that I run on gold and silver, and that thing was saying last night short, and that thing ran against us, and I bailed. I mean, I didn't want to deal with too much of the volatility, but I ran it again, even with the new data that showed gold and silver going up, and it said even this morning sell, and I said, well, I don't know why this thing it must be wrong, and those things turned around and they started heading lower again. So I run now also a weekly signal along with the daily signals, so I'm able to get a bigger term picture too. So for the swing traders out there, I think I have more to offer in terms of the broader perspective. So I've got a weekly signal. I've also got a swing signal, which is 2 to 3 days, and then the daily signals. But those daily signals last night, and they're cycle-based and spectral analysis-based. We're saying that gold and silver were in a sell last night, and I just, it was too much volatility last night to handle, but they turned out to be correct. They turned out to be correct.
I'm aware of that. Yeah, it did. Hey, thanks for joining us, my friend. Shane Spolian.
Thanks, Larry.
You bet. WolfTrader.com, folks. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I thought I'd let you know that we just had a $2 rally, $2,000 in the crude oil market, which not unexpected. It's been in a pretty strong uptrend here, and as you can see, we had a really nice bottom here the other day at that 53 and change. Actually, it's 51 and a half and change. We're now trading at 56.20. Actually 56.40, so that's had a $2 rally in the news, whatever it was this morning. I'm not sure because it's I'm news observant here. I don't get to hear anything, which is good. I'm more data dependent. That's my new handle, data dependent. Don't know what it means, but it sounds pretty cool. Anyway, we're having a pretty strong rally this morning from a very oversold situation. The support that we hit last night, folks, if you'll look at your charts, you can see the NASDAQ made a perfect 382 retracement down there at that 70, 374 something, I believe. We're now trading, substantially above 75.20, I believe. We're now above 77 again. The S&P has rallied more than 30 points this morning, and the Dow Jones has rallied a great deal. Whether it continues the rest of the day or not, we have to wait and see. But this is related to some type of a news announcement that I don't know, what it happens to be. There should be some strong resistance at 57 in the crude oil. So that'll be something, to see what's happening. I did want to bring to your attention one other thing. And this is what we were looking at. Oh, here goes the beepers again. Boy, that means something big is happening. This is where we pulled back to on Friday. We had that pretty good move yesterday. We got up around 21, and of course it'll probably be going back down again. You're right, Marshall. The natural gas is looking good. We're trying to build a position in that. We have a small position down there at that 208 level, and as soon as we get it moving a little bit and look for a pullback, we're going to try to see if we can buy some more. But right now there's not too much to do. The gold is down. All I can say is gold's down $34. That's the harmonic number. If it gets any lower, folks, it's going to be a major top in gold. So we'll see. So live every day in an attitude of gratitude, and may God bless.